In this video, I'm going to cover everything that you need to know about using seller credits or seller concessions as a first-time home buyer. The problem is a lot of people are aware of saving for a down payment to buy a house, but they forget about the closing costs, which can add up to thousands of dollars. And so when they get ready to buy a home, they're not actually prepared to pay for that house. So using seller credits is a way that you can actually get the seller to pay part or all of your closing costs. That way you can just focus on the down payment, and the cost of buying a home is a lot lower when you use something like this. So Redfin came out with a report saying about 44% of US home sales included some sort of seller concessions. So it doesn't mean the seller covered all of closing costs in every single instance, but around 45% of home buying transactions included some sort of concession from the seller. So I want you to understand how this works and how you can use it to your advantage. So the main way that this works is, let's say that your down payment, you're buying a $300,000 home. So let's say that the down payment is 3% down, which is the minimum for a conventional loan. So that's going to be $9,000 as your down payment. Now, let's also assume that closing costs are going to run you around $5,000. Now, closing costs are for things like a title search, you have an appraisal, you have taxes, you have insurance, recording fees. All of those are going to add up into your closing costs. So if your closing costs are $5,000, then you're going to have $14,000 due at the time when you purchase your home. However, if you ask the seller for some credit, maybe you ask the seller for 2% in closing costs credit. So that would be 2% of the home's purchase price value. So that would actually be $6,000. So that would reduce pretty much all of the closing costs that you would need to bring, and you would actually have a little bit more that you could use for something like a rate buy down. Now, what you have to do with closing cost credits is they have to be negotiated into the offer. So this is part of your purchase agreement. Okay, so when you're making an offer on a home, before you purchase it, you're going to submit an offer with your real estate agent saying, hey, we want to buy this home for $300,000. Now, in that purchase agreement, what you can do is ask the seller to pay part of their proceeds towards your closing costs. So you might say, hey, seller, we want either a percentage or a fixed dollar amount. So you could say, we'll offer to buy your home for $300,000, but we want 2% back in a closing cost credit. Or what you could do as well is you could say, we want $5,000 in a closing cost credit to come back to you. So this is applied at closing towards allowable costs. It can't contribute towards your down payment, and it can't give you cash back, okay? And this is not something that you get in cash. The seller is not going to hand cash to you in closing costs. But what will happen is your lender will apply that to all of the transaction details. And so what you'll see is you'll see your down payment plus closing cost minus the seller credits, and that's going to give you the final amount of how much it's going to cost to purchase a home. Now, what's the big advantage here for the seller? Because keep in mind, the seller this is money coming out of their proceeds. So the more money they give to you in credit, that's the less money that they get to take home. Now, this can be an incentive for them though, because it can help move that home in a slower market. And frankly, it's just a lot of buyers need help with some sort of closing cost credit. And so it can help them be able to actually move that home a little bit quicker rather than it sitting on the market for longer in slower markets. Also, buyers can afford more without lowering the list price. This can be a great way where the seller doesn't have to lower the listing price of their home to appeal to more people. They can actually just offer that credit instead of lowering the listing price. So the seller credits can actually cover quite a few things. So the main thing that you're going to see people using for seller credits is covering things like closing costs. So this is going to be everything from your lender fees to title insurance to escrow, attorney fees, things like that. It can also cover prepaids and taxes. So it's going to cover your prepaid homeowners insurance, property taxes, and any HOA dues as well. You can also use it for rate buy downs. So either permanent or temporary buy downs. So permanent buy down is where you're basically kind of think of it like prepaying interest to lower your interest rate. Or a temporary buy down is where you can use those funds to subsidize the monthly payment for the first couple of years of you buying a home. That's really common on new construction builds where the builder will actually offer some sort of seller credit to give you a temporary buy down. You can also use a seller credit for things like post-inspection credits if there's any fixes that come up in the inspection. So let's say you did a home inspection, you find some issues with the home, and the seller can actually give you credit instead of just repairing those fixes. You can negotiate for that with your real estate agent. And then also, It can cover things like home warranties or appliances as well. If they need to be, if you need new ones or updated ones or repairs, that can be really helpful to get that kind of credit. Now, some quick pros and cons here. Obviously, this is going to lower your upfront costs. It's going to reduce the cash that you need to bring to closing. You're able to use some extra savings for moving costs, furnishing, emergencies, things like that, right? If you can lower the upfront cost of buying a home, it's going to make it more accessible and not put you in a tight situation. Because unfortunately, a lot of people buy a home and they end up emptying their bank account when they do this. And that puts you in a really tight spot when you do move in and maybe something breaks soon and you don't want to have to put that on credit or struggle to come up with cash. And so being able to alleviate that upfront cost by using seller credits can be really beneficial. Also, it can help you lower the monthly payments and potentially long-term interest on a mortgage if you're using it to buy down the interest rate. So it can lower that monthly payment if you're using something like a temporary buy down, but then also you can save interest if you are using that seller credit for a permanent rate buy down. Over time, you're going to see that interest savings. And then also, credits can help you manage some repairs in the way that you want to. So again, if something came up in the inspection and you get a seller credit for that, that can give you a little bit more cushion to make repairs the way that you want, rather than the seller just doing a quick fix to make things go through with a deal. Now, some cons here is that sometimes this can lead to a higher loan amount. So for instance, sometimes a strategy that people will do is, again, let's go back to a $300,000 purchase. Sometimes people will say, hey, seller, okay, so that's listed at $300,000. Well, we need $5,000 in a credit to help with our closing costs. We'll actually offer $305,000 and ask for $5,000 back in closing cost credit. So effectively, you're financing that closing cost credit into your purchase. So you're going to have a higher loan amount, but the seller is more enticed to take that offer because that money's not coming out of their pocket. So that is a viable strategy if you need help with that upfront cost. But again, it can lead to a higher loan amount. Also, if you are increasing the price of the home, it has to appraise at that amount or higher. And so it's something to keep in mind. If you're asking for a ton of credits and raising the price a bunch to include those credits, it's possible the home might not appraise for that amount. Also, it's not as competitive in really hot markets where there's multiple buyers and a lot of competition. Again, keep in mind those seller credits are coming out of the seller's pocket effectively. It's coming out of the proceeds that they could make from selling their home. And so it's going to be less attractive than someone who isn't asking for any sort of seller credits. And then also, again, if you have the bigger loan amount, you're going to have a slightly bigger payment if you are asking for a higher price to get those credits back to you. So if you are considering using seller credits when you're looking at buying a home, I want you to consider a couple of things. First, understanding the market that you're in. Okay, so are you in a buyer's market or a seller's market? You can talk with your real estate agent about this and see, okay, what is the temperature in the neighborhood that you're looking to buy in? Because if you're in a buyer's market, you're going to have a lot more leverage to ask for seller credits. If you're in a seller's market, things start to get a little bit tight. It's going to be difficult for your offer to stand out to a seller if you're asking for a lot in seller credits. Also, don't ask for more than you need. So you want to prioritize what you absolutely need. And so this is a mix of talking with your loan officer and talking with your real estate agent as well. And saying, okay, talk with your loan officer first about saying, what is the bottom line cash to close due for me to buy this home? Is that number doable? And if not, talk to your loan officer about, hey, what would it look like if I asked for some seller credits to reduce these closing costs? Then that's something that you talk with your real estate agent about to see if that's something that you actually need. You don't want to ask for closing costs just to see if you can get it because it might affect your negotiation position. Also, make sure you're working with an agent who you can actually ask questions to about what's going on in the market and seeing if seller credits is actually going to be a beneficial strategy. So the agent that you're working with should be able to understand, okay, if you absolutely need seller credits, you've talked with your loan officer, you know that you need this to make this work, they can help direct you into, okay, maybe in this market, we might need to offer a higher price to make these seller credits seem attractive to a seller. Or maybe here are some other neighborhoods that have a little bit of a cooler market that you could ask for the price that you want and with closing cost credits that you want as well. And then also be specific about when you're making your offer about how much closing cost credit you need. The mistake that I see a lot of people do is they just kind of are like, I think I want 3% seller credits, or they try to get as much as they possibly can rather than actually knowing this is exactly how much I need. And again, the way that you do this is talking with your loan officer, looking at a closing cost estimate breakdown and saying, okay, this is exactly how much I need for this home to ask for. That way I can actually afford purchasing this home at closing. So be specific with exactly how much you need, not just a general estimate of, I think I need 2%. You need to know a good idea of what that dollar amount is when you're going to make your offer on that home. Now, there are maximums that you can ask for. Most of the time, people aren't going to run into these maximums here, but it's going to depend on the loan type. So if we're looking at conventional loans, if you're putting less than 10% down, the maximum seller credit is going to be 3% of the purchase price of the home. If you're getting a conventional loan with 10% to just under 25% down, it's going to be a 6% maximum seller credit. If you're doing more than 25% down on a conventional loan, 9%. Now, keep in mind here, most of the time a seller is not going to want to give you 6 to 9% of the purchase price towards your closing cost credit. On average, we're going to see somewhere around the 1 to 2% is more common. 3% tends to be the maximum that people are looking at with a conventional loan. FHA will allow you to go all the way up to 6%, no matter what kind of down payment you're putting. VA is 4% plus closing costs that they can cover. And then USDA goes up to 6%. So these are the maximums here. I wouldn't suggest going over 3% in a lot of markets because a seller just often isn't going to want to give you that much in credit towards your closing costs, again, because that's coming out of their proceeds when they sell the home. Now, you don't just have to ask for this up front. You can also ask for it in a couple different situations when you're buying this house. So first, what's most common is people are going to ask for this in their original offer, right? So this is going to be if you need some help with the total amount due at closing, and you talked with your loan officer and you talked about seller credits and you say, okay, I need $5,000 in seller credits to make this work. That's when you can ask, is when you're submitting your offer to the seller. Now, another place that you can ask for seller credits is at the post-inspection. So if your inspection came back with some issues, you can actually negotiate for credits or repairs if you want to do that. But often people will negotiate some sort of credit at the post-inspection to cover some items that may need to be fixed. And one thing to keep in mind here is you're going to have an appraisal happen on this home. If that appraisal comes in short, it's possible that you may need to adjust that credit. Okay, so again, if you're buying that $300,000 house, you're asking for $5,000 in closing cost credit. Well, if that home then comes in, the appraisal comes in at $295,000, well, it's very unlikely the seller is going to want to lower the price of the home and still give you an additional $5,000 credit. What might end up happening is they might say, hey, we're going to waive the $5,000 credit, but we'll sell it to you at $295,000, for instance. And so you kind of are meeting in the middle there to make that deal work. So the next step here is if you're ready to get pre-qualified for a loan to see what these numbers look like, to break down your estimated closing costs, to see what type of loan you can get approved for. Our team works in all states except for New York. And you can go to winthehouseyoulove.com/lender. If you like these videos, you're going to love working with our team. Everyone has the heart of a teacher and is going to be happy to explain the process to you and make sure that you're confident and comfortable going through the next stages of buying a house. And if you also would like to get connected with a real estate agent, we have a network all throughout the nation of really helpful real estate agents. You can go to winthehouseyoulove.com/agent to get connected there as well.